A very good morning, it's Fabio. EURUSD is currently consolidating due to the fact that we have a US bank holiday. Furthermore, unemployment in the United Kingdom went up to 5%, showing that fewer people are currently working and that the economy is currently slowing down, causing upside pressure on Euro GBP and downside pressure on GBPUSD. If we, for example, look at Euro GBP, we can very clearly see that we've been rejecting the overall monthly open and demand zone, giving us a beautiful potential long setup in towards the highs. And furthermore, if you look at GBPUSD, you can see a clear sell-off in towards the downside from that supply zone and from the yearly open. Now, this is mainly because of the pound weakness that we are currently seeing. And again, this is caused by the unemployment, but at the same time, wage growth fell to 4.2%, meaning that pay isn't rising as fast as before, and again, that the UK economy is slowing down. Last of all, US government reopening drives short-term risk on, boosting additionally the Australian dollar and the New Zealand dollar and equity flows, whilst weakening the Japanese yen. Good morning, guys. My name is Fabio, and as always, a beautiful market outlook for you here on the major dollar pairs. Now, EURUSD has continued in its overall downtrend. We can still see that the overall downtrend is intact, but that we are seeing some slow price action so far this week here on EURUSD. Yesterday, nothing really to be traded personally, and I'm still waiting for a breakout out of the current range that we are situated inside of. What I'm looking for is either one more sweep of the overall highs and a push into this supply zone to then look for a potential shorting opportunity, or for the market to start pushing down, break below the monthly open, retest that, and then again head down lower. But preferably, we would see one more drive in towards the highs here on Euro USD, where I'll be keeping my eyes open how we react to this area of supply here, as that has the potential again to continue pushing USD further in towards the downside. If we do not see any reaction inside of here and we just see that the overall 4-hour order flow stays intact, then I'll be looking for a short position from this overall bigger bump in the road, which is within the overall impulse that we have in towards the downside, our main liquidity high, which I would love to see get taken out. And once we get into that high, I'll be looking for an aggressive sell in towards the downside. So that's what I have my eyes set on at the moment. EURUSD currently, again, not in an area of interest. If we break below the monthly open, yes, we can get into shorts. Other than that, just a waiting game for now here on EURUSD. Looking at the dollar index, we can see that the dollar index is also still consolidating and resting here on the monthly open. The monthly open still acting as an area of resistance. So what could happen is, again, clearly a rejection of that monthly open and another push down. We've been creating some ascending lows here as well, so I wouldn't be surprised if we see another push in towards the downside, liquidating the initial reaction in towards the highs and following the overall supply zone further in towards the downside. Now, that is preferable, and once we reach that area of demand, then inside of there, we would love to see the 4-hour change of character, which then has the potential to push the market up higher, though not expecting too much from today's price action, again, with that US bank holiday. But these are the kind of like preferred situations. One more drive down, see that 4-hour change of character, and we can look for longs. Or if we suddenly see some upside pressure from whatever news could come into the markets, then look for longs on a retest of the overall monthly open. But we would need a 4-hour change of character for that to happen. So these are kind of like the two situations, and obviously if we just see that the overall order flow continues pushing down lower and lower, we'll just let the price or the market push the dollar down lower without getting in. Now, going into GBPUSD saw an aggressive sell-off in towards the downside. Again, this is mainly due to the bearish pound news that just came out. We've been reacting to this internal liquidity high over here, and with the ascending price action that we have, we've now broken in towards the downside underneath the monthly open. This has the potential already to continue pushing down lower, but it needs some support from the dollar, so keep an eye on the dollar index. So I'm not sure if then again GBPUSD is the best expression for a GBP short. I would then say focus more on a GA or on a G Swiss or on a Euro GBP, as again the pound against the dollar is now purely driven by that news that came out on the pound. And that news, by the way, supports a further rate cut on the pound, causing again people to be, or traders to be, more bearish on GBP. So again, there is potential for the downside, but I'll be waiting to see if the dollar index gives us that confirmation. Preferably, we would see the dollar index break above the monthly open before getting into GBPUSD short position, or let the dollar push down a little bit lower, see GU a little bit stall over here, and then we could get into some new potential shorts. But I'm not getting into new shorts just now yet. Yeah, again, preferably we would see GBPUSD push up higher and then get into a short position, but we could already get that for the downside if the dollar is ready. So let's see if the dollar aligns with that GU short at all. We'll need to wait and see what happens on there. Again, it does look good from this area of supply to start selling off together with the monthly open as an area of resistance, but I'll be definitely waiting for that dollar index to align with that overall bias. AUD has been pushing up higher. Yesterday we saw kind of like a slow retracement down lower. Now again, the main bullishness today on the Australian dollar is coming from that government shutdown ending. Looking at the daily time from an AU, it still makes sense to push up higher. Looking at market structure, we can see that we are bullish in between the low and the high. We've liquidated the overall low here, and we have an overall demand zone situated here. So yes, it does make sense to look for further upside on AUD/USD throughout today. To see that continue pushing up higher. For any potential skill wins, you would need to look for this low here to go before looking for any further upside once again. Looking at USD, we are seeing some further upside. I was preferring a further downside push, to be honest, but again, the government reopening has now caused some strength there on NZD and on AD. I wouldn't be surprised if NZD/USD does push up higher. It's given us a 4-hour change of character right over here, and then retraced in towards the weekly open and the imbalances that we had. So this could push up higher. It's not my preferable setup. I would only be looking for longs from the yearly open. So another drive down lower and then a drive up higher. But again, I would not be surprised if it does push up higher. So if you are looking for longs, then I would be focusing on some lower time frame setups, being on, for example, the 1 hour or the 15 for that potential further upside. As I do believe that there is some short-term further upside here to be gained for NZD/USD. As at the moment we've seen a bullish 4-hour change of character, we've seen a tap into demand, we've seen a tap into the weekly open, and we still have liquidity highs open. So I wouldn't be surprised if we do see a stronger push in towards the highs. And looking at the dollar index is obviously still resting here at the monthly open. Today is just a slow day, so not much to do, but we still have the monthly open as a resistance level. We still have these buy before the sell as an area of supply, and we still have the ascending lows here as well without a tap into this demand zone. So obviously I'm preferring, guys, another drive down lower and then a drive up higher. But yeah, you never know what happens. But NZD/USD does look good for a potential short-term long. Then we of course have USD CAD, USD Swiss, USD yen. So USD CAD myself, I already positioned myself in one buy, so small buy on the monthly open and on the liquidity low over here with my stop loss well below the overall lows. So quite a large stop loss, but I'm looking to swing this up higher in the near future for 1 to 2 risk to reward. And furthermore, I just want to be in the markets for the case that, again, Trump says anything whatsoever. Looking at this, we're obviously situated within an area of daily demand, and if we then look at the 4-hour time frame, all we are simply doing is identifying the overall impulse in towards the highs, and then within that overall impulse, we identify the overall liquidity lows. So let me just delete this real quick. So within the overall impulse, we have 2 main liquidity lows, and liquidity low number 1 obviously got tapped right over here. Now, that aligned beautifully with the monthly open and the 0.5 fib, hence why I took my first entry, even though I still see the dollar index going down lower potentially. For me, it's just good to be in a USD CAD because USD CAD isn't that dependent on the dollar index as much as, for example, EURUSD or GBPUSD. But if it does head down lower, that would be beautiful because I would love to see a 4-hour change of character when taking out this liquidity low over here and, for example, making a tap into this demand zone, maybe even hitting the free monthly open level. That's what I'll scale in aggressively once again to look for more longs, but I'm already happy with being in a long from over here. With my stops well below the overall low, targeting again a 1 to 2 risk to reward. So let's see how that plays out. Overall, just following the dollar trend that we've been seeing in the recent months/weeks. And then of course USD JPY. So USD JPY saw a short-term push up, still bullish with the yen basket following down in towards the lows. I still see further downside here for the yen basket, meaning I still see USD JPY heading up higher. So UJ has obviously been benefiting massively from that weak yen. Again, we've been calling further upside for UJ, just didn't retrace into my area of interest, which was these equal lows over here. Would have preferred to see UJ go lower, but again, UJ is extremely impulsive and didn't need to retrace that low. What it did was simply retrace into these imbalances over here, and then from there it headed up higher. So again, expecting UJ to head up higher. Overall, still hasn't taken out any major liquidity. This is the next liquidity high, which could facilitate a pullback, but I'm still looking more for that yearly open. Gonna have to get hit at around 156, 157. So short term still bullish on UJ. I mean, I saw some of you take a setup over here inside of this demand zone. That was nice. Overall, now we're getting into an area of risk. Why? Because of the fact that the overall impulsive phase is so-called ending again. So we've seen a very small pullback with a smaller impulsive phase, but this now also means that pretty much you're already getting into the so-called amber phase, where you are trading after the break of structure line. So this always gets a little bit more risky, because once you trade after the break of structure, which is positioned over here, that's when everything gets a little bit more risky, and where you preferably don't want to be getting into new positions. You want to be getting to new positions within the overall, let's say, reaccumulation phase, where you take out liquidity from the previous impulsive phase. So yeah, is what it is. Sadly, no real good setup there then on UJ, besides the one that we got here inside of this demand zone, where, let's say, the early buyers here got liquidated, and then the real push up happened. Looking at the 1 hour time frame, there were some nice lower time frame setups to be taken, where we even liquidated this initial low over here, and then here we got the 1 hour change of character, and then from there the market started pushing up higher. So yeah, congratulations if you were in that. But for UJ, still just looking for some short-term upside. And then of course we have USD CHF. So the Swiss franc has been relatively strong so far. Again, the Swiss pairs look good for a drop, though I must say I'm more of a fan of an USD CHF, for example, which again liquidated, for example, this bump in the road. So when you look at the overall impulse that you have here and towards the downside, again, where is the overall liquidity high? Right over here, or you have to take out this high itself. Now, looking at that price action, again, you see the market retraces exactly towards the 0.5 fib, retraces in towards liquidity, then gives the 1 hour bearish change of character here. That is then supply, and that then pushes the market down lower. So still looking for further downside here on USD CHF. But regardless, we were talking about USD CHF. USD CHF looks good for some short-term for the downside, though I would be, let's say, monitoring what happens once we reach the free monthly open and this sub for the buy here, because that's most likely also when the dollar index will then reach its area of demand if we do see that, let's say, larger drop-off. Furthermore, the Swiss franc is fundamentally relatively bullish. I personally don't like CHF that much, or USD CHF that much, just because I'm relatively bullish on dollar regarding technicals. Fundamentally, the Swiss franc is also bullish. I got a question, Fabio, why don't you use this liquidity high? Now, the reason for that, guys, is because when I have, let's say, price action, or let's say descending highs like this, I just always take the entire trend line. I use this as trend line liquidity, and then I say, hey, I just want to come to the top trend line liquidity point, because otherwise I'm going to have so many different liquidity highs here, here. Like at some point in time, you need to make a decision. Otherwise, you're going to be taking 20 different trades, right? So that's why I always just take, very simply said, the very first liquidity high of the overall descending trend line. This here is not part of the overall descending trend line, because the high that we have over here liquidated the two highs that we have here to the left. So this is its own liquidity high, and these are the descending liquidity highs of this overall descending trend line. But yeah, there is still some short-term downside possible for USD CHF for sure. And then of course we have gold. Gold fundamentally bullish. I did a good update inside Discord on gold and why it is fundamentally bullish, with the ending of the government shutdown and Trump announcing that there's going to be $2,000 stimulus checks. So what's going to happen with the $2,000 stimulus check? Everybody's going to start spending more money. So what's going to happen is that spending is going to go up, which is going to spark more inflation. But at the same time, government, let's say, how do you say it in the right way? Let's say the government gives everybody $2,000. Where's that $2,000 going to come from? It's going to be printed by the Federal Reserve. So these kind of like subsidies, they work inflationary, which devalues the currency over time. So it's not very bullish for the dollar, to be very honest, and it's more bullish for gold, because gold is a good hedge against the inflation and against the devaluation of money. Hence why I'll be looking for scale wins on gold on any potential retracement. So that's it for today, guys. Yeah, looking for that, and that retracement might come from, for example, this liquidity high over here at 41.61. So that's it for today. Thanks so much for tuning in. Today we're going live on YouTube as well. Stay tuned for that, and see you soon.